90% of traders who try to trade smart money concept lose money, not because the strategy does not work, but because they fail to understand the most important foundation of the market. In this video, I will break down market structure in the simplest way so you can start understanding how institutions actually move price. My name is David Bright, founder of Gravystar FX. Now let's start by understanding what market structure actually is.
Let's start with a simple definition of market structure. Market structure is the pattern of price movement that shows direction of the market. Price doesn't move randomly, it moves in swings, and we can identify the swings from here. This to be a swing low, this to be a swing high, this to be a swing low, this to be a swing high, this to be a swing low, this to be a swing high, this to be a swing low, and this to be a swing high. So these swing structure points are known as the external swing points of the market structure. Looking at this market structure in this scenario, we can say that we are bullish, and understanding the direction of the market is one of the key essential things to every trader. By you trading along with the trend, let's look at this. For instance, that we are bullish, we have this swing high setting up the swing low here. This is now our external swing high, and we have this to be our external swing low. Right here we have the swing high got taken out, which literally refers to an old high. We can call this a break of structure. At the other hand, we have this here new high setting up this new swing structure low. And one thing about the swing point is the swing help us determine who are in control, either the buyers or the sellers. Currently on this bullish market structure, we have this swing low take out this swing high. Now this tells us that buyers are in control of this market. Since we know that buyers are in control of this market, if I'm to be a swing trader, I will capitalize on buying from the swing level, targeting this old high. Now we have this to be a break of structure. In a bullish market, price forms higher high, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. Let's look at this for a minute. This low is higher than this low. So this literally says to us that this low is lower compared to this because this is higher. And if price at some point, this low came back lower, at this point, this is literally going to be a lower low because this low here stands to break right below this low. But currently in this market, we have this low right above the previous low, and this made this automatically become a higher low because it is higher compared to the previous low. Now the same thing happens here, so we can see this over and over again. If we are to go to a bearish market scenario, and this is where most traders get it confused, like how can I know when the market has changed from bullish to bearish? Now it's literally simple, and you can tell when a market changed from bullish to bearish. It's literally, this is where we have our last break of structure from here, which is this break of structure. We have our last break of structure from here. Having this last break of structure from here tells us one thing, that buyers are still in control of this market until we see this low got taken out, which is this external low got taken out. We are still bullish, and in this market scenario the low has been taken out. Since we know that this low has been successfully taken out, we are going to shift our bias from bullish now to bearish, because price has just created a new lower low. And to confirm this bearish move, we need to see price pull back to the upside. And when price make this pullback and fail to take out this high, this is literally going to be a low high, and we are to expect price to print a continuation to the downside, which is going to be a lower low at this point. Now, this is literally a lower low because this low here is lower compared to this low right here. So meaning we have higher low, higher high, lower low shift in the market structure. And remember, when price set up this lower low, it failed to take out this high. All right, so once we understand that price failed to take out this high and came back to put in this high and took out this low, this had to give this low a lower low because this low is lower compared to this low. Now our swing structure will now be from this high to this low. Once this low is confirmed broken, we are now shifting our focus from bullish to bearish, and this means that sellers are now in control of the market. All right, so let's head into the advanced type of market structure. And one thing is, this type of market structure is usually seen on the daily time frame, the 4-hour time frame, the 1-hour time frame. This is where you can see the simple market structure. Now, if we should move into more advanced concept type of market structure, where we have price move this way, we do see price make these moves. This is the type of market structure that we see on a regular basis. Price always make this move, and at some point smart money traders might look at this to be not relevant, but the real truth is this type of market structure always appear on a specific time frame. This is an advanced type of market structure. Looking at this, we are bullish break of structure, which is continuation to the buy side. And once we see this continuation to the buy side, we understand that at some point price will come back into a discounted level of demand before the continuation to the buy side. So many smart money traders, of which I see, when they see price retrace or literally give this pullback and make a little bit of a move to the upside and give this continuation, I see so many traders start selling the market. Now, these are early sellers, and they tend to believe that at this point price is bearish. But what they fail to understand is the swing point. Now, we as a smart money traders, we understand our swing points. Now, this is the current swing low, and this is the current swing high. Let's take this for an instance that we had a change of character from here. and price created a swing low, and we had the swing high at this point. Now this high set up this low, and this low set up this high. During this pullback phase, we should expect price to make a move internally, like low, high, low, high, low, high, and low. When price change bullish, it is right here, because we can see the internal change of character. And as a smart money trader, we are looking out to get involved in the swing low here, because this is the low where we are looking at buying from. Again, smart money traders get mistakes when they keep seeing this happen, and they be selling, from here. They'll be selling. Now price will actually come back, mitigate the actual demand, and run up to the upside, come back again to mitigate off another demand level. At this point, why price mitigate this demand level? I believe that another smart money traders will also get involved with sell. In moving forward, we have this to be a break of structure, which is continuation to the buy side. One thing I see early smart money traders doing is, when price make this move, taking out this high, setting up this new high, they are looking at this low here to be the recent swing structure low. But this isn't a recent swing structure low. When I see smart money traders buy here, because they believe at some point that this is their swing low, on a real state, this is the actual swing low. Now, how can you tell the actual swing low? You need to understand the farthest point during the pullback and a reversal is your swing structure. This is the farthest point price made before this pullback here, and this is the farthest low price made before the reversal. So this is how you can tell a swing point. Smart money traders will be buying early, and they'll be initiating their buy positions from here. And what price will do is, when price comes back down, price will gravitate through their positions, taking them out, and now they will believe that market is now bearish, and they will start selling. And when they are selling, price will come back, mitigate off the origin demand, which is from this level here, and gravitate through their stop losses, and price will make a new swing high, which is now going to be a continuation to the buy side, which is this swing high right here. Now our new trading range is the swing high and the swing low. Now let's go into a live market and put all this together into one simple market structure. Over here, this is AURUSD, and this is the daily time frame, and this literally is the time frame you use to read the direction of price. So here we have this market give us this swing high and this swing low. And what the price do at this point? Price break through the swing high here. This is now a break of structure. Once we had this break of structure, we had a pullback at this level, might be small, but it's still valid, and price gave this new high here. This is our recent swing low and our recent swing high in this current price action. So let's look at something here. We have continuation to the buy side, break of structure. At some point, we can see price made a pullback to the downside, and if we should look at this right here, we can see the internal pullback, the internal change of character, the internal pullback. Now, at some point, many traders will be trading these internal pullbacks. We have this high, this low, high, low, high. This low, high might be little, but it counts, and this low. Now, let's look at something here. Price swept out this here, taking out the early sellers from here. Price also swept out this here, taking out the early sellers from here as well. All right, so this isn't a bearish market structure, and anyone who tries to short in this type of market structure is going against the trend. Now let's look at what happened. Price came back down. We have this level here of unmitigated demand from this level, and price came back down, mitigating this demand here, because we can see that price didn't mitigate this demand before the expansion. Price came back down, mitigating this level here, and rallied to the upside. And I believe at some point we do have sellers too at this level, because they do see this to be a continuation for the sell side, and they will initiate their sell position from here. Once they initiate their sell position from here, price came back here, and you can see test the supply, came back down, test the supply, came back down, test the supply, came back down, came in again, sweeping all liquidities from here, because all these are liquidities. Price swept all this liquidity, putting in this high. We can also tell that at some point some smart money traders or swing traders will short this position, because they will look at this to be price has shifted bearish by taking out this low, but in reality price is still bullish. And what happened at the end of the day? Price broke through, taking them out, collecting all stop losses, and breaking the swing high, which is this right here. Currently, our swing structure for this market structure is bullish. Why will I sell when I understand that the market is bullish? Going against the trend is literally going against the market. As a professional trader, you don't go against the trend, you trade along with the trend. Just like I showed you the advanced type of market structure, we can see all these here are internal price action playing out on a real time. Now we know our swing structure, we know the direction we are going into, we know where we are going to get involved. There's no point for us trying to short or go against the market. First thing you need to know is, where is my swing structure? Now the current swing structure is this low here and this high. So anything happening here are all internal price action. And if I'm to be a swing trader, I will be catching up a recent buy from this level here. The reason is, we have here to be the last level we had the last buy before aggressive sell-off and consolidation and expansion. And if I should pull this across, and we have that nice price reaction of this level to the upside. And yes, we can see that price broke through this high, giving us a new higher high. Let's look at this right here. Our recent trading range is from this low to this high. Currently, we are bearish because price just broke through the swing low here. Now, am I going to look for buys on this? No. Am I going to look for sell? Yes. Let me give an additional bonus by going down to the 15 minutes time frame. Here on the 15 minutes, this is where our swing, which is our overall swing low, got broken. At some point, price also gave this swing low and the swing high. Now this is a break of structure on the 15 minutes time frame, which is literally continuation for the sell. Currently the market is closed for this week, And this is now our swing high, and this is our swing low. So all we have to focus is on sell, not on buys. Now this is a supply level which looks very nice, easy and simple that anyone might want to target. If you are a swing trader, this is the foundation of market structure and why it is one of the most important concepts in smart money. Inside our Telegram community, we analyze the market during London and New York session and apply these same concepts in real time on pairs like EUR and GDP USD. If you would like to learn and follow along with our daily analysis, you can join the Telegram community through the link in the description. And if you found this video helpful, make sure you like the video, subscribe to the channel, and leave a comment on the next smart money concept topic you would like me to cover. You can also follow our social platform to stay connected on our educational content.